Bitcoin traders learn the most expensive lesson. Do not ever give up because the price is not moving. I mean, do not ever give up. I mean, haven't they told you before that giving up when price is being choppy, is being boring, is completely fallacy? It's a complete fallacy because, like, the price here is building energy, guys. So you cannot give up because price is building energy. It's like, oh, why are you building energy? Just move without any energy. What gets out of the chart when you're looking at it is that once you see something building like this, you should get out of it by like, yeah, okay, it's building energy. It's a mentality that you need to adopt. So you get with positive thing. It's a positive thing. It's not a negative thing for the price to stall like this. It is building energy for a potential move. And this is why a lot of people miss this. Why do you think people miss this? Because people, they've been like so bored to death. They're like, yeah, it's not moving. I'm not bothering checking my chart today. I'm not gonna check anything because I'm gonna check and it's like 63K, 62K, 64K. It doesn't really matter. It's not really moving. And then someday you wake up and then boom, up there. Well, you should double down on the work during energy building phase, during the ranging choppiness phase. Because as I've said multiple times in previous videos, the MSB in here was the only thing that's keeping us from going all the way higher. So you should be like sitting there on your hands, waiting for it to break. And once you see any sign of breaking, you should enter. So something like this, you see. So I mark the MSB here. So you see, this is the MSB on the weekly. This is the only level that we needed to break above in order to have all of this big impulse. So how should you be ready? Well, mark the level like this. You wait for the energy to build. And then once you get a candle close above, you enter a long position. Could have made a lot of money in there. So easy. So easy. Now let's explain why this happened. After these two false breakouts, so multi-candle false breakout to the upside, multi-candle false breakout to the downside, that is more than enough for you to know, yeah, we're ranging and we're just generating liquidity. So the purpose of all of this choppiness that you see in front of you and here is to generate liquidity. That's it. It's basically accumulation mixed by liquidity engineering. So once you see a multi-candle false breakout to the upside and a multi-candle false breakout to the downside, as you see in front of you on the chart, you should know this is something cooking in there. Something cooking. Okay. So pay attention to everything. And now we're still, yes, into the February candle. So this red zone, this big zone that you see in front of you is the February candle. It's very important candle. We need to break above it. Okay. We need to break above it in order to confirm that the bottom is in. So next level to watch is basically this 82, 180, the last area before we've completely went to zero. If you've seen this, so remember this, the Clarity Act and all of this, we had it and we went all the way higher because of the Clarity Act and it passed the Senate. And then once it passed the Senate, we dumped to zero. Well, the same thing happened here. We had the same news though, but inversed. So here we had some sort of rumors about wallets and Michael Saylor selling. So here people were like, yeah, Michael Saylor is going to sell. And then actually he sold. So Michael Saylor sold here, something like that, 60K, something like this. And he sold and he sold. Price failed to go lower. And not only this, wallets. They were talking about the self-custody wallets getting hacked, a lot of stuff about the rolling the dice, and we should have some sort of very wide possibility in order to secure our wallets. So we had bunch of rumors. We had like circulating rumors about the wallets are not safe anymore. And we also had Sailor selling, and we refused to go lower. Isn't that enough? Isn't that enough? That's a huge divergence. So Sailor was selling. Wallets were getting hacked. Some exchanges also closed. They shut down completely, shut down the whole operation. And we still haven't gone any lower. Doesn't that tell you that's news divergence? Doesn't that tell you that, okay, we're going to reverse higher? Because when the news failure happened, the opposite of whatever was going on is going to happen, especially if it's combined with these kind of energy that we've been building. So you see, the kind of energy that we've been building is setting us for a very good upcoming move that you see in front of you right now. We've seen it. And like what? 1, 2, 3. 3 days. Oh my god, 3 days. So good 3 days. We've been up and up and up and up only almost. So pay attention to this red line and this red line. This red line that you see in front of you is the resistance, and it's an important resistance to reclaim because once we reclaim this level, the bottom is in. Okay. So you should just know this. You should know this. If we reclaim this level, that means the bottom is in. Okay. And why is that? Because look, we've been building a lot of energy, and we also failed to go lower on sale or selling. That's news divergence. And we built a lot of energy. After that, we went higher and higher. The thing that you notice is this. Whenever we go higher, we flip resistance into support. So that was resistance. This area was resistance. Now it got flipped into support. So now we need to flip this resistance into support as well. And we need to flip this resistance into support as well. And this one is the one that matters a lot. Okay. So people are asking now, is the bottom in? Is the bottom in? Is the bottom in? Well, it doesn't really matter. What matters is how the price is moving from here. Anything that you see in front of you should be higher lows. Higher lows, just higher lows along the way, something like that, higher lows, higher lows, higher lows, if we want to confirm a bottom. Just trade it as it is. Do not be obsessed about, oh, is it the bottom? Is it not the bottom? It doesn't really matter, trust me. It just, what matter is the price action that you see in front of you. Just trade it accordingly, and that's it. Do not be obsessed about a bottom or not a bottom. The thing that I want to add to today's video is this. People have like a wrong concept when it comes to generating liquidity. People think that the market take in liquidity when you have an order and then the market dumps into it. So let's say you have a limit buy order here and here. So the market can only take the liquidity when you get triggered like this, right? You get triggered and yeah, okay, so you're now inside of the market. That's how the market is taking liquidity. What if I told you that the market can take liquidity in completely different way? Let me show you how. The market can take liquidity by either triggering your orders or something very nice that the market is doing as well, which is what? Front running your orders like this. You see, your orders are there and the price is doing this, and then you get front ran. Once it happens, it forces you to have some sort of FOMO, fear of missing out, and you move these orders from there all the way to there, and from there all the way to there, until you FOMO at resistance. And this is how the market is taking your liquidity. So market can take liquidity in two ways. Remember this. Let me repeat. Two ways. The first way, either the market is going and triggering your limit orders like this. You get triggered and now he's taking the liquidity. The market has taken the liquidity. Or it front run your orders. Let's say your orders are there. Front run it like this without triggering it and goes higher and higher and higher without you. That makes whoever want to buy there is completely FOMOing in and feel FOMO, and now he's urging himself to buy very high price. So the market can take liquidity in these two ways. Remember, okay? Anyways, the people who were waiting to buy at 58K and 55K, well, they're not in a good position right now because now they're questioning themselves, questioning their strategy, asking whether the bottom is in or not, or have they missed the bottom or not. But do not FOMO. Do not do anything bad. Try not to fuck yourself over. Try to, be professional. No FOMO, no panic, nothing. If you had some orders at 58K, well, it's your fault. Why are you waiting all of this? Like, who told you that 58K is not promised to you? 55K is not promised to you. You should have always some sort of strategy to adapt to whatever is happening in the market. So, levels to watch. This, and this. So this should act as a good support. This should be resistance, and this should be resistance. All the red zone that you see in front of you is the February candle. We should get above it finally to confirm a bottom. That's it for today. If you want to learn how to analyze the charts, or if you want to get my analysis on a daily basis, join my Telegram channel completely for free. You can see it in the description and the first comment. Thanks for watching. Have a nice day.